I bought some call options today that I want to share with you. But first, let's talk about how the overall stock market is doing. A lot of people get confused when they watch my videos because they think I'm a bear. And it's true, I'm long-term bearish based upon the economy and the history of the stock market, but I am short-term bullish because I see what's happening with market psychology. I see stocks rising over the past few days, and I know there's a very good chance that we're going to rise through the end of the week, quite possibly, and maybe even into the first week of September before the markets start to turn around and behave more based upon how they do historically. Keep in mind, September is historically the worst month of the year for the stock market, but August historically is flat. And in order to get back to flat here in August, we need a little bit of a rally here in the last week of August. Luckily, we are starting to see one. The Nasdaq is up about 2.8% on the first 2 days of this week so far. And when the Nasdaq does have a major rally, it will rise about 3.5% total in a week. So we definitely have a little bit more room to run up. But there was also some very specific stock market news that came out today that got me really excited. So excited, in fact, that I did buy some call options on specific stocks. Now, I'm going to tell you what those are in just a minute. But first, I want to focus on the economic news that came out today so that you can understand a little bit about why I remain long-term bearish. First of all, job openings fell to a 28-month low. This shows a slowing labor market, and it's a sign that we're entering a recession. At the same time, U.S. home prices rose in June, and this shows that inflation continues to run hot. Now, as we enter this period of the economy slowing down or stagnating, at the same time that inflation continues to go up, this puts us into the worst case scenario for the United States. And that worst case scenario is a situation called stagflation. Stagflation is when the economy is stagnating at the same time that we have inflation. And this is called stagflation. It is the worst case scenario because this forces the Federal Reserve to raise interest rates even higher in order to knock out inflation. But as the Federal Reserve raises interest rates, this has the effect of causing the slowdown in the economy to become much worse. And ultimately, this ends up sending us into a major recession. Unfortunately, that's where we are at right now. And that's one of the main reasons why I remain long-term bearish. The fact is, the Fed's monetary policy has lost some of its potency, and interest rates may need to rise much higher as a result. With this now entering stagflation, the Federal Reserve is going to have to become even more hawkish in order to get inflation down, and that is going to send us straight into a recession. And the U.S. consumer gets it. Consumer confidence retreated in August to close at levels signaling a recession. And if the U.S. entering a recession wasn't bad enough, regional banks now face another hit as regulators force them to raise their debt levels. Now, essentially what's happening here with the regional banks is there were a number of bank collapses back in March, and the U.S. government is not trying to prevent more bank collapses. I want to be very clear about this. They are requiring banks to raise their debt levels not to prevent a collapse, but rather in order to shore up the bank's balance sheets so that when the banks collapse, there will be less of a hit to the federal government and the FDIC. That is what's happening. Now, this is good for the FDIC, good for the government, not so great for you and I, and certainly not great for regional banks, because regional banks now have to issue more debt, and that means their profits are going to go down. As their profits go down, two things happen. One, their stock prices are going to go down, because when companies report lower earnings, that in turn sends share prices lower, at least in a normal market. And the second reason it's bad is because those decreased profits are going to hurt the banks and possibly even trigger additional bank collapses. So the federal government is literally saying, we're not even going to try to prevent more bank collapses. We're just going to get them to shore up their balance sheet, so when they collapse, it doesn't affect the US government that bad. This is ridiculous. It's like the US government is just given up and they're just like, forget everybody. We're just going to protect ourselves. And this is not going to be good news for bank stocks. The regional bank ETFs are down significantly over the past few weeks. And don't forget, they might continue to fall further because we're still waiting on Moody's and Fitch to downgrade some additional banks. We don't know when that might happen. It could happen anytime over the next 3 to 6 months, but that is still coming as well. So there's just continues to be a ton of downward pressure on banks. And more than likely, this will lead to more bank collapses throughout the rest of 2023 and especially into 2024 and even into 2025. Keep in mind that during the 2008 financial crisis, the bank collapses in 2008 only numbered about 300, but by the end of 2010, over 1,000 banks had collapsed. Bank collapses tend to happen very slowly, so this is not something that's just automatically going to all happen in 2023. It will continue to happen in 2024 and 2025 as well. So that is the economic news that came out today, the reason why I'm so bearish long term. But why was I so bullish short term? Why did I call options today? Well, let's talk about the individual stock market news that came out today. Let's start with the earnings that came out, and then we'll talk about some other news. We get things started with China. NIO reported a wider second quarter loss than expected amid a China slowdown, as well as a product line revamp. NIO's loss was more than double its year-ago loss. NIO's revenue came in at 8.77 billion won versus 9.25 billion expected, a huge miss there. And the adjusted loss per share came in at 3.28 won versus 2.45 expected. Again, a wider than expected loss as well. NIO shares were originally down 9% pre-market, but they did recover on the rally that we got on Tuesday. NIO finished the day down just barely over 1%. Shares of BYD, on the other hand, jumped after the Chinese EV maker posted a 200% surge in first half profit. One of BYD's ADRs was up 4.86% on the day, and the other ADR was up 5.42% on the day. Now moving on to the US, Best Buy scaled back its sales outlook even after the results topped expectations. Best Buy's earnings per share came in at $1.22 adjusted versus $1.06 expected, and revenue came in at $9.58 billion versus $9.52 billion expected. Please keep in mind that the earnings per share was adjusted. This was not the actual earnings per share, so the beat wasn't nearly as good as it appears just by looking at these numbers, and the fact that they lowered their guidance did not help Best Buy at all. Shares originally surged about 5%, but finished the day up just a little under 4%. Meanwhile, computer maker HP's earnings disappointed on weak PC pricing and soft printer sales. HP stock tumbled after their mixed results, and they also provided a weak forward guidance. HP shares were down over 5% after hours. So those were the earnings that came out on Tuesday. Now let's move on to the incredible, great stock market news that caused me to buy some call options today. The first amazing news is that the first Bitcoin ETF could be coming soon as the court ruled in favor of Grayscale over the SEC. The SEC was saying that crypto is a security and therefore Grayscale couldn't just go out and do a Bitcoin ETF. Bitcoin, on the other hand, was saying, no, it's not a security, it's a currency. After all, it is called cryptocurrency. And the judge ruled in favor of Grayscale. Now, this is not only huge news for Grayscale because it brings about a Bitcoin ETF, which could cause the price of Bitcoin to rise once this ETF actually comes into play. But more importantly, it's also great news for the other lawsuits that the SEC is currently going after, including Coinbase. So we're going to talk about those stocks in a second. Let's see what happened to Bitcoin today. Bitcoin rallied more than 7% after the court sided with Grayscale. This also sent crypto stocks rallying. Marathon, MARA, was up 28% on the day. HUT, meanwhile, was up 16% on the day. And Coinbase was up 15% on the day. Now, I did buy a call option on MARA today. This is a stock that I do believe will continue to go up. Don't forget that MARA was trading at around $20 per share just a few weeks ago. It finished the day right around $13.70-ish. So this is a stock that has a lot of room to move up. And given the good news that's coming out recently, this is a stock that I do hope will continue to rise over the next few weeks. And that is why I bought a short-term call option on MARA. Now, my call option expires September 15th, and I do hope to get a little bit of a move up over the next week or two before that option expires in the next 3 weeks. The other stock I bought a call option on today was Apple. Apple sent out invites for their September 12th launch event where a new iPhone 15 is expected. Apple stock was up about 2% today on the news. And this is a stock that I would expect to continue to rise. Whenever Apple has a big product announcement, a new release, their worldwide developer conference, anything like that, the stock normally rises going into the announcement and then it sells off on the day of the announcement. Now, the reason for this is simply a situation in the stock market, some market psychology called buy the hype, sell the news. Buy the hype, sell the news essentially means you buy the stock going into the news and then you sell on the day of the news. So you buy the hype leading up to the event and then you sell on the day of the news. That is why I bought a call option on Apple. I will be selling and closing out that call option before September 12th. I just bought that to buy the hype and I'm trying to gain some of that run up as Apple hopefully rallies going into this event. So those are some of the plays that I made today. And if you want to know everything that I'm buying and selling and when all those plays are being made, you can check out the coaching program. There's a link for it down in the description of this video. If you get a lot out of this video, be a good friend and share this video with your friends and family and on your social media pages so that they will know what's going on in the market as well. Don't forget to hit the like button and subscribe. And if you're on YouTube, go ahead and click the bell icon and click all. That way you'll get notified when I release my next video. And if you missed yesterday's video where I went over some important stock market news as well as some other trades that I made this week, make sure you watch the last video that I uploaded here.